Mike, thanks again for coming. This is always a great time of year for us as we hear from you on predictions made in the past that may or may not have come true, and those for the future that most likely will come true based on your past. But tough year, right? Unlike any other, as the Fed has come forward with their policies. I mean, was there a playbook? I mean, is there any other time in history, the history of data, where the Fed or others could come together and say this year looks like these years, or are they writing new playbooks?
So it is a different playbook. So we haven't had a pandemic, in the modern history of the central bank. So that's different. And I would say the closest analog to a pandemic distorted recession and recovery pattern is a wartime economy. So in each case, so wartime you don't have lockdowns, but you have a chunkier labor force like pulled off and sent to wherever the war is being fought, right? And then it really distorts final demand because you're ramping up production of, war material. And so it's just a very different kind of economy. And then the, recovery out of that, like after World War II, all of a sudden, okay, now all this labor's back. What are they going to do? A lot of them went to school for a while. So it, there is a bit of a history there. And, there's usually a lot of government spending during wartime. So you'll have that surge in inflation after the war is over. So there are quite a few parallels. And that is, to me, the closest thing to what we're dealing with a pandemic, Very, very odd shock to labor supply, and then it heals abruptly, and demand is distorted in the intervening period, and that's sort of what happened with the pandemic.
Is the Fed's strategy to bring down inflation right? I think this time last year we were I think wasn't it last year we were still dealing with, is inflation permanent or is it temporary? And then all of a sudden, nope, it's permanent, and here we are, 300 basis points plus further ahead. So,
yeah.
Generally agree with Fed Powell and the governors. Do you wish they'd, keep the pace, slow down, track the data? How do you feel about that?
Yeah, so I think the factors that started inflation were in fact temporary, but they went on long enough that then it begins to get baked into wage expectations, and that's when you'd say, okay, this is now a little bit more permanent. The change in language by the Fed occurred, I think, within like a week of Powell being selected for another term. So it was transitory. And then Biden picked Powell, and then Powell said, yeah, actually, inflation's kind of permanent, and we're going to start raising rates. So there was the interview, and then there's, now I've got the job. So I think, but, the Fed's change in language too, I'll go back to what I said earlier. One of the things the Fed can do to influence inflation is to get everyone to believe that we're going to kill inflation. And if we all believe the Fed's going to kill inflation, our expectations for how fast prices will rise and what our own expectations are for wage gains are muted by that. And so, I think I look at what the Fed's doing. It's definitely how they should be posturing, but are they really going to, how quickly do they really feel they need to get inflation back to 2% to maintain credibility? I don't know the answer to that, and they haven't really, come out and told us. I don't think they're going to want to put the economy through any kind of serious recession. There's too many other things out there in the world to be worried about right now. So I think the Fed will lighten up if things get squirrely, and they'll be more patient if they have to be. That's my guess.
Yeah, no, and based on all of the noise that we read, almost every day, I mean, even from the time that we started talking 2 weeks ago about, topics and where different data points were, the data seems to change day to day. But I want to come back to something you said about Powell. Are people listening to Fed Powell when he says, hey, no, this time I'm really, really serious. I'm going to keep going. I'm going to keep going. Or is the rest of the investing public saying, it's bullshit. You don't want to put the economy into recession. I mean, how would you address that?
Yeah, you know, it's difficult because, of course, at times like this where things can go one way or the other, you know, if I'm Michael Burry or, you know, someone who, you know, made a big call in the great financial crisis like he did, you want to stand out a little bit. So you get people on both sides making some pretty bold predictions in an environment like this, because then if you're the one who's right, guess what? You're going to make a lot of money in the next 10 years. You're going to have great asset inflows. So there's a bit of that going on. I mean, at the end of it all, I kind of have to look at the tips market and say this is the balance of opinion about where inflation's going, and it looks like more or less people believe the Fed is going to bring inflation down. And I think the real debate is how far they have to press against demand to do it. And again, I go back to that really depends on, you know, do goods really begin flowing from China? I mean, what Frank was saying about how bizarre things were in China, I mean, it's incredible, you know, and that really did affect global supply chains and, you know, the rate of price increases and our own labor supply in this country. And I'm still a little bit mystified. I don't really know, have people's attitudes toward work really changed forever in a meaningful way, or will the reality of inflation and weaker asset valuations begin to force people to think, you know, actually I do like consumption and I guess I need to get back to work if I'm going to have a decent living standard. I think we'll get back to that. I don't think basic human nature changes that much, but it is also easy to get consumed by the busyness of life and not, you know, really live an examined life. And I think the pandemic gave people a lot of time to think for the first time about what really matters to them. And, you know, I think we heard some of the speakers mention that. Certainly Molly, you know, thought that there was a reckoning. I know I don't understand my own daughter's attitudes toward work very well. It seems pretty casual to me, but, you know, then again, I grew up poor and they didn't, so, you know.
Were they also hodags?
No, you know, I used to joke about that. I said, if you go to Rhinelander High School, your odds of getting into like a really good school go way up because you'd be viewed as, you know, kind of an oddball candidate. But, you know, go to Madison West, good luck getting into UW-Madison. But they did fine. They did fine. And
I want to come back to the Fed again. So, you know, I think Powell has said, hey, the stated target going forward, we'd really like to get down to 2%. How important is 2% in your mind, or could it be, you know, 2.5 or 3? I mean, at what point did they say? I mean, let's just say for a minute that Powell isn't hell bent on killing the economy, and he says, gee, you know, if I look at TTM inflation, we're at what 6.5%, core is 5.7, but I think the last 6 months is like 2.5, right? I mean, per month. I mean, it's coming down with the exception of services.
Yep.
So could the Fed at some point maybe wake up one day and say, yeah, we said 2%, but I think we could get away with 2.5 or 3. I mean, what's the downside of that?
Yeah, so I mean, they already fudged a little bit in saying, well, you know, over the last decade, we kind of ran below 2% a lot of the time, and 2% is a long-run average, so we can live above 2% for a while. So that there was kind of that fudge they did that gave them, you know, maybe a little bit of wiggle room. But I think, you know, central banks are effective when they're believed and they have credibility. And so if out of expedience they now say, oh, we've thought about it and we've changed our mind, it's 3%, well, then the next time around, everyone's going to wonder, oh, well, are they going to now say 4%'s okay or 3.5? It's been 2 for so long. And, you know, the reason it's a positive rate and not 0 is at 2% inflation, you can get some relative price adjustment without necessarily having to decrease wages in an area or something. Like if you have 0% growth in something, you're actually losing ground in real terms if average prices are going up 2%. So that's kind of the rationale for a positive rate of inflation. It allows for a bit of, I guess, kind of painless relative price adjustment, which does need to happen in an economy now and then. But I don't see them changing the long-term 2%. Again, we might see them waffle around about, well, over a 20-year average, it's been 2%, I could see them doing that, but I don't think they'll change the magic number.
Yeah, because they want to keep the commentary at, hey, let's focus on bringing down inflation. We can all agree later what the target should be, but it's too high now.
They want to be
right?
believed.
Yeah,
They need to be believed by market participants.
Got it. So I can only imagine in your role that the number one question outside of the HODAG thing, which we can come back to,
Yes.
is are we in a recession? Is it stagflation? If it's recession, is it soft? Blah blah blah. I didn't hear you talk about stagflation today, but when you put the economic graphs up, I started thinking stagflation. So comment on that, and maybe as a follow-on, does it really matter if we define anything as recession or stagflation? Because I think we all feel like we're in something, right?
Yeah. Well, the notion that a recession is 2 consecutive quarters of decline in real GDP is a good rule of thumb. It's not the only thing that matters, and I mentioned that the labor market remains way too tight for us to say this is a recession now. But it's kind of an artificial thing to say 0% is the magic line that we fall below, right? In a country like Japan, where demographics dictate that the labor force isn't growing, it's actually shrinking. I mean, it's much harder for them to have positive growth with a declining labor force. And we'll come to that at some point, too. So that kind of arbitrary notion it's bizarre. Like what we should be concerned about is real GDP per capita. That's what you'd like to see grow over time, not, if GDP is growing because the workforce is growing dramatically, so what? I mean, people are trading off leisure for work, and they're getting some income, and we're making more stuff. I don't know if that really makes people so much better off. So that's one point. Growth rates in economies, like China's economy grows at 7% because they got a bunch of people that used to be out in rural areas weren't counted in the market workforce. They're kind of in a, living off the land, and now they're moving into urban areas, taking paying jobs and counted in the labor force. Okay, you're growing by 7%, but that's not going to happen on a sustainable basis for them. At some point, you don't have these people coming out from the hinterlands into the labor force. Those growth rates are juiced or not by labor force demographics. And so I think we put too much focus on that. We don't think hard enough about what really matters. Is it stagflation or not? Of course, that's a term for slow GDP growth and higher inflation at the same time. Inflation will be what the Fed wants it to be eventually. So I think we will come off of high inflation. We will eventually get back to 2%. It's maybe going to take 24 months. The baseline rate of real GDP growth is going to be lower because I think the labor force won't grow as rapidly. And I do think the reshoring and some of the other adjustments, the rebalancing that Frank talked about, just puts sand in the gears of the economy. There's a reason things got outsourced. We were producing things at the cheapest locations around the world, and there were a lot of improvements in global shipping. Costs came down. That was a good thing. That's going to get unwound to a certain extent, and we're going to reshuffle where things are made. Maybe some of it moves to India, other parts of Southeast Asia, maybe some to Mexico, maybe some back to the U.S., but that'll be higher cost. And so, almost by definition, I don't think we'll have the specialization and division of labor we used to have, and that'll mean, somewhat slower growth in the steady state. And again, if there's a big push to move away from fossil fuel energy sources, if we don't go to something like nuclear, it's just a lot less efficient, and that's going to be a little bit clunky too, and another headwind. So, somewhat slower growth, not a calamity.
Yeah. You talked about sort of the world economy and supply chains shifting years ago and continuing to shift. Is globalization dead? Is it dying? Is it changing? Is it one of those creative destruction kind of doctrines?
it's changing because there is kind of a battle between authoritarianism and Western democracy. And, you know, Putin is right now the tip of the spear of authoritarianism, and there's a set of countries that seem somewhat interested in aligning with that, you know, kind of the usual suspects, you might say. And then there's some other countries that are a little bit more neutral because, you know, those countries have things other people want too. So it's going to be interesting how this plays out. You know, I'm encouraged that it seems that at higher levels, finally, the U.S. and China are starting to talk a little bit more seriously. You know, they pulled their U.S., I think roughly their U.S. ambassador into a higher role for foreign policy in Xi's government, which, you know, and he had a lot of good things to say about the United States and the American people, which was refreshing. So, you know, maybe we can get back to a better relationship with China, because realistically, I mean, if we're going to be in a major standoff with China and Russia, how easy is it going to be to solve any of the big global problems? I mean, they're not going to get solved. You know, Russia doesn't want to give up on fossil fuels. I don't think they care. I don't know how much they talk about global warming, but I doubt very much. So, you know, it's hard to imagine how global problems get solved if we don't have better relations there. So I don't think it's the end of globalization, but it is going to look different, and it will depend on how well we can maintain a relationship, in particular with the Chinese. Because without the Chinese, then I think Putin would be pretty seriously isolated.
Let's talk about China for a minute. I mean, obviously the zero COVID policies are at least today, seem to be reversed. How big of a deal is China to the world economy? I mean, if they come back online full steam, how do your four major forecasts change? 1% GDP growth, core inflation at 3.7, unemployment below 5%, S&P at 4,400.
Moderately favorable for economic growth, GDP growth, and favorable in bringing inflation down. You know, there's still so much manufacturing capacity that they built up that, you know, when those factories are up and running better again, I think that would make a meaningful difference. Not quite as much of a direct impact on our economy as our own labor supply getting back to pre-COVID participation rates, but meaningful. You know, it's very easy to overestimate China's sophistication. I mean, as big as they are in chips, they can't make any of the most sophisticated chips. They're like 4 generations behind the most sophisticated chip makers in the world. They'll close that gap pretty rapidly because they have outstanding technical education in math and science. And, you know, that is one thing that concerns me. Like, we better at least keep an alliance with India because we need talent. It doesn't seem like very many young people in this country want to pay the dues that you have to pay to be really good in those technical areas. It seems to be too easy to make a lot of money in finance, you know, or fields like that. So some of those really technical areas just don't draw people. And, you know, we are the global center of finance, but it's pretty important for the future of the free world that we be the leading edge of the most sophisticated technologies. You know, I certainly don't want to be looking up at the Chinese in cyberspace at all, or the Russians. And that's a tough battle, you know, and we need good technical people. So,
you talked about labor a second ago, and obviously in the presentation you talked about it a lot. And in terms of the underemployed or those that have just sort of vacated the labor force, how do you get them back? I mean, is it government intervention? Is it credits? Is it? I mean, obviously we've talked about retraining, blah blah blah. But is there a federal/state government solution, in your opinion, on getting people off the sidelines?
Well, yeah, but it's like tough love, you know. I mean, really, if people are able to access enough resources without working, And, maybe people learn to be more resourceful in COVID and realize, I don't need to eat out that much, and if I don't eat out, I swear my daughter who's just graduating college, I think she could live in America on $10 a day. Honest to God. Like, she does not buy new clothes ever. If she does, she goes to like some consignment store. I don't understand this. Okay, it's not how I am. But I guess you got to reject your parents in some way, and that's how my girls reject me. They don't really care about the trappings of having income much. Although they're both very productive and will have great jobs, but they don't seem to have the same kind of motivation. So yeah, I don't know. The missing low-wage workers that Raj Chetty of Harvard wrote about. I think what happened is leisure and hospitality, travel, that sector was shut down for a long time. And that's where you had a lot of low-wage workers, right? The best of those workers, the most motivated and hungry, left the sector and found something else to do. Then when people try to restart their leisure and hospitality businesses, well, now you don't have your best people. They left for something else. And it was really hard to open, I think. And I think some of the other workers in that sector in the really expensive cities just left those cities. Like, they couldn't live there anymore. It's too expensive. So they're not back. And, the hotel I've been staying at for 20 years in New York City, when I go for board meetings, they have one of the best lobby bar restaurants in Midtown Manhattan, and they are still not open. There's no room service. And I think some of it's like unionized workforce, and they're at an impasse and negotiations and stuff. But how are you not open now? It's a spectacular space, I'm buying my own bottles of gin, Campari, and sweet vermouth and making drinks for people, total strangers, It's kind of fun, but, it's... Anyway, yeah, so I don't know. I just think, for whatever reason, people have found a way to scrape by. And maybe, like I said, maybe they're working in the informal economy. Maybe they're in the gig economy. I don't know. We certainly had some income support payments going on for a while. So, maybe people had saved up enough and they still have a little bit of runway with that. But eventually, I don't think homelessness it's a problem in a lot of cities, but I don't have the sense that it escalated dramatically during COVID, to be honest. So I don't think it's that, but I don't know how people are getting by.
I want to stay on the topic of labor, and then we'll go to Andrew for a few questions from the audience. And this is a tougher question, and I'm not sure you'll have a great answer, but hell, you made up a whole bunch of shit earlier today, too. So,
I'll have an answer. Yeah.
On the topic of labor, right? So, immigration obviously is a huge topic today. You were an economic advisor to Bush and Clinton. If you were sitting in front of Biden today on the topic of immigration, how would you help him kind of through this little immigration battle? Not necessarily at the border, but how do you take those folks and turn them into eligible labor force participants in the U.S.? Is it a fair question, unfair question? Want to take a shot at it?
It's not an unfair question. The whole problem with immigration is whether Republicans and Democrats can ever agree on anything in that space, and they each have certain requirements, I think, in mind of their must-haves, and the other side doesn't seem willing to budge. So I'll just go back to what I said earlier. I think, first of all, I do agree that citizenship and the right to be in this country is precious, and we should enforce our laws. I think if you don't enforce laws on something like that, like, why would somebody get ticketed for going 10 miles an hour too fast? Being in the country is very fundamental, and we should be serious about that. We should take, some immigrants for humanitarian reasons. There are people in real distress around the globe, and I think that's an important part of the American brand. And then thirdly, it is really important that we win the war for talent that is going on between authoritarian countries and Western free democracies. And we need to be recruiting the best people we can to come and participate in this economy. Those would be my three principles. I have no idea how to politically get anything done. As you've noted, I can talk. You know, I remember when I got the offer to be the dean of the business school at Wisconsin, and I was talking to my wife about leaving Dartmouth, and she said, "Well, what would that job be like?" And I started to describe it, and she said, "Oh, you're a talker. You'll be good at that."
All right, thanks for your thoughts on that. Andrew, do you have a few questions for us?
Yeah, I'll give you an energy one, which said, Wisconsin is not an oil and gas state, and we only get sun half the year. As the economy shifts to electric cars and the grid has to expand, where do you see Wisconsin getting its energy, or which renewables will be pushed to grow?
Well, it's probably a global energy issue. That's a global market, so I think it'll be a mix of sources, and I don't think we're terribly unique. Is it really we only have sun half the time? I mean, it feels like we don't have sun half the time lately, but in any case, I would say it's a blended solution. People that I talk to about energy say if there's going to be any kind of, reasonable transition away from fossil fuel consumption, it's got to involve more nuclear than is currently accepted, I guess. And in particular, there's some technologies where nuclear power can be delivered at smaller scales, maybe more safely. So I think we should expect to have to, as a society, maybe tolerate a little bit more of that kind of energy production, even though it has its own maybe adverse side effects, while we see what happens to climate, with more data and evidence, and, continue to push into renewables. But there's no one solution. It's got to be a mixed bag of different things. And I think Wisconsin will still import plenty of fossil fuel, natural gas, and, run our power plants that way.
Are we ready for it? Are we ready for a world of EV and natural energy, or how many years before we can really throw the switch?
Yeah, I don't think the batteries and other things that are required for electric vehicles. I don't know that there's enough materials to make them at the scale that would be required to have the whole like every economy is going to be all electric vehicles. I think that's a ways off. I will say, I don't know why there aren't more like really small personal electric transportation devices. I mean, I think that could really be game changing. I live on the east side of Madison, which is kind of hipster central, so there are people that have these it's like an electric skateboard, and they're just zooming down the road as if they're a car, and they go fast. It doesn't look safe to me. But, there's things in between that and my sedan that I drive all the time, which just seems really wasteful and inefficient. Like, I think we could make a lot of improvement there. Maybe the fixed costs are just too high and it's impractical. I don't know. And, maybe it's safety concerns because, some people are still going to be driving big trucks and Suburbans, and you probably don't want to tangle with them when you're on your electric skateboard.
Yeah, so, out of spite, almost, right?
Yeah.
Yeah.
I don't know.
Andrew, you got another one?
Well, I got another energy-related question, so this follows into the discussion. You touched on some of this, Mike. It said, since electric cars are the future, where will the materials come from to build the batteries outside of China? How recyclable are the batteries? Also asking, when will the Wisconsin electric grid be in the right place to accommodate the future need?
Well, I could say something, but I'm not very well informed. So that's too technical for me to answer about our grid like that. I don't know if anybody else in here would have a better idea of that, but Frank? Even Frank doesn't know, and he's an auto guy. So yeah, that's You've outkicked my coverage there. Sorry. Yeah, I know. Right. Locks.
You talked about tips earlier, and where you think that puts inflation later. What is the Treasury yield curve, 210, for example, tell us about what the market thinks long-term inflation, will be or is?
Yeah, I think the market thinks long-term inflation is much lower than short-term inflation. And people talk a lot about that inverted yield curve as a predictor of recessions, and I would just say again, this is a recovery from a pandemic, so whatever your kind of yield curve forecast and rule of thumb might have been in a different kind of economy, I don't think that applies in the current context. I would go back to looking at post-Vietnam, post-World War II, what happened when everybody came back, and now we're kind of restarting things again. So, I don't think we have quite the same easy analogs for the current period. So, but it does tell us something about inflation, and I think, the outlook long term is lower real growth, lower inflation than we've had recently.
As you talked earlier today about the $8 trillion, holdings with the Fed, as the Fed unwinds that position, what impact will that have on either side of the yield curve on the Treasury side?
Well, last time in late 2018, when the Fed tried to get serious about taking some of the juice out of their balance sheet, was really kind of a calamitous period in the stock market, and they eventually stopped because they didn't want, the chaos was too much. I still wrestle with why do they actually have to take it off? I mean, I think they should stop growing it, but I don't really know what the bad side effects are of them just keeping the position now as it is. For a long time, I'd say the Fed's balance sheet wasn't growing as fast as the rest of the economy. So you could argue a little bit of the growth in the balance sheet was kind of getting it scaled right to a much larger economy in nominal terms. But yeah, I think you have to be careful about having that be a permanent part of the Fed playbook. Like anytime it looks like things aren't going well, the Fed's going to buy up a bunch of troubled assets to shore up market prices so we can all feel like we're rich. I mean, I think we've talked about this before. I still worry that the statements we get with how much our, retirement accounts are worth when the generation, the larger baby boom generations are all, kind of in retirement and trying to cash those securities in, sell them to harvest the cash and buy goods and services. Who's going to be there making those goods and services? Hopefully ChatGPT can do it, because I don't know that we're going to have the workforce, So that's maybe where the mother of all inflations will be, in that, a lot of the monetary expansion has really, when I was studying economics, they didn't really have asset markets in these models, right? The stock market was this other sideshow. I think monetary policy has done a lot to bolster asset prices over the last 20 or 30 years, and we all feel pretty rich, if you've been saving for retirement. But when you try to convert that to consumption goods and services, and everybody else is trying to do it at the same time, that may be where we see the goods and services inflation piece of that monetary expansion. So I won't be surprised if, as I'm older, things don't seem quite as easy.
Well, we'll look forward to the next couple of years of that commentary, because that question's coming back at you.
Okay.
Right? We want to know that in advance of all of us.
Learn to love a low-cost lifestyle. That's my investment advice.
Actually, so stay on the debt thing for a minute. So national debt, $31 trillion and growing kind of continuously. At what point do the alarm bells start going off for you or others? I mean, when do you start saying, "Hey, guys, that's a lot of debt"?
Yeah, the smartest people I know on questions like this can't answer that question. It's very hard to know at what point you would say the U.S. government, which has the world's reserve currency, is not going to be able to finance its debt. I think we're still pretty far off from that, and it sort of takes a currency to beat a currency. So, like, which currency are you going to go with? So, right now the dollar is still king in spite of a number of threats. The Chinese would love to get people to think, you should hold their currency. Who's going to do that? I mean, they're not really an open global market. So, so right now I don't really see a big problem, but I think if government is spending too much money in unproductive ways, that's just a headwind for long-term growth, right? That capital could be used in other ways. And if government is making a lot of investments, and some of them are good investments, but not all, there isn't really probably as hard of a accountability as you have when you're borrowing money in the private sector and trying to make something be productive. So, I think that's the bigger concern, is how are we spending too much through government? Is that a bigger share of the economy than it should be? But at this point, I'm really not as worried about the federal debt. And, obviously the guy who put up the debt clock in Manhattan in 1979 is still waiting for his day in the sun, because it doesn't really seem to have changed our behavior toward debt. And there's really no evidence that we've fallen off a cliff yet.
Okay. All right. Andrew, you have any more?
Yeah, I'll ask about the remote workforce topic came up this morning. And someone asked, saying, you spoke about remote workforce and mentioned a 10% reduction in cost. Does this include a 10% reduction in their wage base? I am hearing larger companies reducing pay for remote workers.
Yeah, so there is a bit of that going on. So, like, if you left San Francisco and you're living out in the woods, your tech company isn't going to pay you what they were paying you in San Francisco. I think there's some of that that's happened. And when I say, so the best data from Nicholas Bloom, an economist at Stanford who toiled for 20 years on the subject of remote work and suddenly had his day in the sun. Like, all of a sudden the world changed and Nicholas Bloom's work was interesting. Nobody knew who this guy was. His work suggests that given the choice, if I can work fully remote at one place or fully in person at another, I will choose fully remote with a 10% discount. Like that's the shadow value of the ability to work remote full time. So I would say that means working remote 1 day per week is the equivalent of a 2% wage equivalent benefit for an employee. Now, I'm letting, most of our employees work 3 out of 5 days from home, some even more than that. We identified maybe 10% of our jobs that can be remote full time every day. I don't tell my employees, oh, by the way, because of that, you're not getting a raise this year. But I know, if I'm being more flexible than the average in the labor market that I'm in, I don't have to be quite as aggressive in my pay increases each year, and my retention can still be average. So, it's not like I'm recommending you go to your workforce and say, oh, I'm letting you work remote, so I'm going to take this money away, but just know that's valued, and over time it will get priced into those jobs, and you'll get the people you want and the turnover rate you want at a lower salary than if you force people to come in every day. And I think it's just a higher quality of life for your employees. I mean, my business, as a nonprofit in development and alumni relations and managing it, 70% of my workforce is female. A lot of them are moms. And you talk about people that value time at the margin, they value it. And not having to, the average commute for my workforce in Madison is 45 minutes a day that you spend commuting. That's a lot of time. When you value that at what people's wage rates are, not to mention the expense of commuting and wear and tear, that's a real thing. So, and then if you work from home, when you do have, people that go to the office, it's not like nose to the grindstone for 8 solid hours at peak performance. There's a lot of like BS, right? I mean, really? People like doing super high level focused work? I mean, unless you're like in a manual data entry job or something, I mean, maybe that you just keep churning all day, but a lot of other things, there's breaks. And, you know, when people are at home, like they get other stuff done so that at the end of the day, you can actually spend time with your family and you're caught up on other tasks. And, you know, there's nothing wrong with that. And I think, you know, I am, you know, an old person, but I'm not going to force people back to the office. Some people on my leadership team are much more bullish on getting people back in the office. And I always say to them, you know, it feels fun for you to be in the office because you're at the top of the totem pole. I think other people may not think it's as fun as you do, you know. You get to go in and, you know, these people all work for you. But Zoom is pretty democratic. So.
Here's another interesting question. Have you heard of the economy collapsing in 2030?
Well, I'm sure someone's predicting that because if they're right, think how smart they will appear. So, yeah, I haven't heard of that, but I have no doubt someone's predicting it. And somebody has got 2040, and Michael Burry's got 2023, you know, of Big Short fame. So, yeah, I think so. Yeah. I think he sees the S&P at 3,000 this year at some point. So that would be a big correction.
It'd be disastrous.
Yeah. The Fed won't let that happen, by the way. No chance.
Let's shift to the state tax environment. Obviously, there's a lot of discussion today about a flat tax. There's also discussion about shared revenue, which you may or may not have an opinion on. But flat tax, does it pass? Do you support it generally?
You know, it'd be nice to have a less distortionary tax system. You know, I was a fan of my thesis advisor at Stanford co-authored a book on the flat tax when Reagan was in office. You know, there's a good case to be made for it. There's a good case for tax simplicity. So, you know, I guess I'm not averse to it, but I think you don't want to, I wouldn't want to change the relative burden maybe across income groups too much. And I don't know at the state tax level whether the effective tax rate is about the same all the way across when you have enough exemptions. So oftentimes people that make a lot of money, even though you've got a graduated tax rate and you know you pay a higher rate on higher levels of income, the effective rate doesn't always show up that way because there's other ways to avoid tax. And the more money people have, the better they are at avoiding tax, the stronger the incentive is to avoid tax. So I don't really know what the income distribution consequences are of the flat tax proposals that are being floated. So I would want to be careful about that because I think life has gotten more difficult for working class blue collar people. And that's something that we should pay attention to. You know, I think post-COVID, they've actually, you know, that's the part of the income distribution where I think you've had some better wage gains in some of the lower paying jobs, and I actually think that's a good thing. You know, I think it's important that an entry-level job is something that people can really make a living on so that people aspire to be in the workforce and not sit out and, you know, mess around on the edges trying to pick up cash gigs. I think it's better for people to jump in and have a career. So,
but so we'll move away from the impact on certain classes, flat tax versus the existing policy. But one of the arguments that I've seen about flat tax in Wisconsin is to bring down the competitive or increase the competitiveness of Wisconsin relative to other states, certainly around us, where their rates then could be materially higher. Could that be one of the solutions to attracting more labor, more businesses, et cetera, to Wisconsin? And does that help Wisconsin solve part of the labor issue?
I would say I would rather our state leaders focus on how to make the jobs that we have in Wisconsin more valuable and pay better, I don't have any desire for there to be a massive amount of migration into Wisconsin. I don't know, you know, it's just more density, more infrastructure you got to build, more people on my lake, more, you know. How is that really making us all better off? You know, there are statistics that maybe make you feel better, but is your quality of life really going to be better if a lot of people move here? I don't think so. I think, you know, as a state, you know, we'll find a way. I think as a nation, we've got to attract highly educated, technically skilled workers to join our team. As a state, you know, we should grow at, you know, whatever our share is, but I'm not interested in Wisconsin becoming a magnet and pulling a bunch of people up from Illinois to work here. It just doesn't, I don't know what that really does. I mean, it will help owners of capital in Wisconsin make more money. So I guess I get that. But will it actually raise the quality of life of the average person? I would say probably the reverse. It's my guess.
That's fair. That's fair. Yeah. Go, oh, sorry. Oh, for me to ask. Yeah, thanks.
Then we're done.
Thanks. All right. So then I'll finish up with this. Forecast again: 1% GDP growth, core inflation at 3, unemployment at 5,
Under
below
5. It'll stay below 5 all year. Yep.
Why not 4?
It may stay below 4. And it really depends on that labor supply. You know, do people come back into the workforce? And if enough people come back in and the Fed has to also keep leaning against demand, then I think we could see unemployment get above 4%. But I don't think it goes above 5.
S&P at 4,400. What is the major threat to this? Because if I heard you right, this is sort of the soft landing scenario. But, you know, from a, you know, geopolitical perspective, I heard you say, you know, absent something, you know, strange happening with Russia, Ukraine, you know, the Chinas, North Koreas of the world. I mean, what are the other things that you would worry about relative to this forecast?
Certainly something crazy in the Russia-Ukraine conflict. Yeah. That, you know, and, you know, think about who we're dealing with there. I have no idea what to expect. So that's impossible for me to predict. And then I think the other thing is just really how well supply heals in this country, and it's taken a lot longer than I would have expected, and that tells me maybe I don't understand some bigger culture change that actually occurred that's going to be more permanent about people's attitudes toward work than I realized. And if that is the case, then, you know, the Fed's going to have more work to do than I was expecting, and then we'll probably be in a world where, you know, maybe the equity markets sell off a bit before they get better, and maybe we end the year about where we are now, and maybe unemployment has to go higher and inflation is higher for longer. Those would be my two big things. You know, and I guess if China got more aggressive toward Taiwan, that would throw a big wrench in many things. But, you know, Taiwan, you know, they're not going to get Taiwan semiconductor. That'll be blown up before China ever got their hands on it.
Yeah,
you
fair.
Know, there's a poison pill there, I'm sure.
Fair.
But so I don't know how to, you know, how to guess what Xi or Putin would do. That's kind of impossible for me to say.
Yeah. Well, look, we appreciate your time as always. It's always a blast to have you in, and we appreciate you sticking after for the Q&A. And thanks for being here. We'll look forward to seeing you again next year.
Fun for me, a retired professor. I have no students anymore, so sorry, but thank you. It's a pleasure to be here. Thanks,
Dave.
Mike.